Why are they so prone to major sell-offs when interest rates go up?
Thanks for having me. I think ultimately they're still concerned that there's risk that these businesses are slowing. Many have acknowledged the weakness that they're starting to see. But as they say, there's when there's one rat in the kitchen, there could be another. And we think there's room for more number cuts across tech. We've had a more cautious view on valuation. And ultimately, I think you have to let the storm pass through. I think many in the tech industry are just late. They're late to call out what they're seeing. We've had multiple companies through tech earnings season say, we're not seeing anything, everything's fine. And, you just look outside, you can see the clouds on the horizon. You can see what's happening in Europe and the US and interest rate rises. You can see what's happening in the backdrop of demand falling in some of our CIO and CFO work that we do as a tech team. So I think the industry is notoriously slow for acknowledging it. And I think many investors understand that. They're ahead of that, and they're concerned that there's another round of cuts that are going to come. So we think into early 2023, that could still be what we call the black ice, if you will, for tech industry, where they all kind of clear the deck. Mm-hmm. And so we've highlighted, hey, many of the valuations have been recognized that are down, but ultimately could take into early Q1 of 23 for the deck to be really clear and everything to be de-risked.
So let me make sure that I'm taking what you just said, which was very, very interesting, and putting it to work in practice in a hypothetical portfolio. It sounds like you say there are more rats in the kitchen, and they are going to start nibbling at the rice, and it's probably not going to clear until the first of the year. So what do I do if I have technology holdings? And are there areas of technology that you feel are at lows now that make them safe enough to invest in?
Most of tech is off between 20 and 80%. So a lot of this is embedded. Ultimately, where's the bottom in the fundamentals? And I think we still have that yet to come. Ultimately, I think for longer term investors, this is the time you want to start to nibbling away. Back to the rat analogy, start to nibble at this block. Again, I don't think we're quite the way through it. So I think the strategy is we're down so much, and a lot of this is already reflected. But the next 6 to 9 months, in our opinion, are going to be very turbulent. And it's on the other side of this. I think we've seen this movie before, whether it was the dot-com era, the financial crisis. These names tend to rise pretty quickly, and no one can call the bottom. Mm-hmm. Let's be honest; it's impossible to call and be a bottom ticker. But we have had a major valuation reset, which gives us more comfort that you can start to pick away on moves like this. But again, I don't think the turbulence is over. And ultimately, as they say in flying, there's a lot of big cumulus-nimbus clouds still on the horizon, and you want to stay away from those if you're a pilot.
Brent, I know you have a pretty big coverage list here, but of course you cover all the biggies, some of these big mega cap names. If you are looking to sort of get in some opportunity, if you have a higher risk profile and you want to buy now, is there a subsector or even specific names that you would put on your buy list if you could sort of stomach the turbulence until the first of the year?
The Jefferies tech team still really likes Microsoft. You go upscale in terms of the quality, right? So you go to the larger caps. These are the household names: Microsoft, Amazon, our semi-analyst, NVIDIA, Motorola Solutions, which is a defensive name our networking analyst covers, that won't feel the pain of what's going on. So there's a handful of names that we think are good stories. And then I think you basically scale into, as the market comes off, you come back into the growthier names, the more exciting names like the Snowflakes, the Datadogs. Those names still may, from a valuation perspective, have some room to settle in, but those are no doubt the best fundamental stories. So I think we're kind of in wave one. Wave one, stay in the defensive stories with good growth and profitability. And then wave two, wait for the sell-off, and then step into some of these riskier assets that I mentioned. And I don't think we're quite ready to take on wave two yet.